All right, smart money, smsfxmentor.com, right? So I told you guys, man, we're gonna try to get you guys a video every what? Monday, Wednesday, Friday, and Sunday, right? So we're gonna try to drop a video Monday, Wednesday, Friday, and Sunday. I repeat this so I can keep myself on track, right? Because I was supposed to drop a video today, but you guys probably won't get it until Wednesday. But it's okay, right? Um, we're gonna try to stay on our grind. We're gonna try to keep this thing moving, trying to get you guys in these markets and making some money, right? Some extra money on the side, whatever you want to do, right? But you'll be able to make an extra couple of dollars to be able to enjoy yourself, right? To be able to live a little bit. Today is most common, right? We're going to be going off into key levels, all right? So I believe that we went over, um, support, resistance, supply, and demand. So this time we're going to go over, all right, key levels. Now, remember, guys, these are all confluences that you would use um, and implement in your trading strategy. All right. So you're going to try to implement these into your trading strategy as far as confluences go. Right. So you're going to try to put this in your methodology and in your psychology. Right. So without further ado, we're going to share the screen. And like I said, if you guys already know this type of stuff and you know, you're like, hey, I'm not a beginner no more, dude. I need to know some more stuff. I'm telling y'all, you're gonna make more money off of the basics than you will make off any other thing, right? Now, I do offer a strategy, something that I use, like I said, using these confluences. But you know, when you ready for that type of stuff and you did your due diligence, you went online and you already, had your confirmations of what you need to do and what you need to better up. You just implementing these as confluences to help you out, right? To help you get through your journey. So we're gonna go ahead and share the screen with you guys, and yeah, man. Um, let's see. Go ahead and get that widen up for you guys, and it's a lot of stuff on here that's more advanced. But we're not gonna get off into that right now. We're just gonna try to keep everything smooth and simple. All right, so you guys can get to this next level, right? Um, Man, my phone was dead, so just not cutting back on. It's currently 12:47, right? So let you guys see how I'm getting it in. I'm working. I'm working. Um, Anyways, right? So we're gonna go with these key levels. So what I like to do, man, when I'm looking for key levels, right? I'm looking for areas also that price has hit, right? So that key level, I'm hoping that price has gotten to that key level and hit that key level. And then I go from there, right? I go from that number to the next number, to the next number, to the next number, to the next number, right? But key levels are psychological levels, right? They're bank psychological levels. And like we always do, at the beginning of each and every session, right? We want to go over to um the internet and we want to look up the definition. All right. So we want to go ahead and get that definition in there for you guys so that you guys can understand too as well. Um, what it is, but you're gonna go do your due diligence as well. Um, so that you can understand and know what's going on too. Okay, guys. So um, key levels. What is key level in trading, right? So key levels is trading horizontal support or resistant areas. This means that the peak of or through in price graph line up to a horizontal psychological barrier. Support and resistance lines are critical concepts in technical analysis. Okay, so they really gave you like or whatever definition, right? But anyways, right? So I'm gonna give you guys the definition of key levels, right? So key levels is like bank psychological levels, right? So this, let's just say we dealing with money. A lot of street cats can relate. But you don't want change, right? You don't want like 25 cent, 30 cent, 40 cent. You leave that to like businesses, corporations, like supermarkets, right? Things of that nature, right? You don't want, let's just say, if I'm coming to you and I want a transaction, and it's $10, right? And my transaction $10 or $20, right? You know, you don't want to say, oh, your transaction, you owe me $20.32, right? You want $20 flat, or you want $21, right? You know what I mean? So you ain't gonna say like, oh, give me 24.50. You know what I'm saying? You're gonna say, give me $25, right? Just so you can keep the change out the way. You're not gonna be wanting to keep digging in your pocket, giving out change, right? So that's the same way the banks you want to think when you're looking at the bank. You want to look at the psychological number of it all, right? So you can see what's going on right here. As I got it highlighted, right? You see price can be teeter-totting all up and through here. It could be going to 80, 800, 870, 897, 959. Why wouldn't we just round that out to a flat even number right here? Okay. So why won't we just, you see how price at 61,684, right? Why not just round it out to 62 flat? Now, I'm not saying this is a psychological level. I'm just telling you that that is pretty much, um, yeah, I don't know why my keyboard is acting foul, man. It's been on charge all night. Anybody else having a problem like this? Been on charge all night. Um, I don't know. I might have ruined it, dude. It's been on charge all night, man. It seems like it's not working without being charged, guys. And that's literally what's going on. Look at it now. It's gonna work. I've been having technical difficulties too, guys. So that's why you haven't been seeing me upload. It's just been a lot. Besides the movement. Okay, but anyway, right? So why wouldn't you just want to put a 62 flat, right? That way, if 62 flat, let me see, make it a little bit bigger. I like to paint these gold because they're like golden areas to me, because they're gonna be real levels where price is gonna probably interact with, right? So instead of price being at 61, 382, right? We'll make it at 62 flat. Or 61, 380, 382, we'll make it at 61 flat, right? Because we see price going down, so where will price go down to? If it want to even itself out, instead of having all this extra little change right here, it'll shoot back down to this 161 level, right? You see what I'm saying? So let's just say 161. Let's just say we're gonna try to stay in the area that we're in. Let's go. Let's do 160 flat, right? So boom, now we got 160 flat, right? It's a psychologically level. If prices to break down through the 61 flat, I want to drop down to 160. Same thing right now. If it wanted to start going back up, what number would it want to go up to or round off to? You know what I'm saying? And that would be 62 flat. See what I mean? And so these are key levels that you can mark off when you're in an area or you're in the zone. You ain't got to mark them all over the board. If you want to and you're that advanced, and that's cool. But the market don't really move more than, a few thousand or 1,000 pips or 1,000 points in the market, right? If we come up here and measure this from here to here, let's just see if price was at 60. When price almost came back right here, when price came down to 62, where did it go to? If you look, you'll see it shot up to 63, 63 flat. If you also look on here, that's also a pivotal point. So that's 63 flat is a pivotal point. So 63,051 is the pivotal point, but right. So when the price was at 62,000, where did it shoot to? 63,000. When it was at 63,000, where did it shoot to? Almost or it shot to 64,000, right? So these are what you consider key levels, because no matter what, when price is going up, it's going to a level, it's going somewhere. So obviously it went from, let's just start all the way back. It went from 160,000 right here, right? All the way up to 161,000. It went from 161,000. Now I did it over time to 62,000. It went from 62,000 to 63,000. It went from 63,000 to 64,000. And then that was an all-time high. Then from 64,000 back down to 63,000. From 63,000 back down to 62,000. So from 62,000, it should be going back down to 61,000. It don't have to, but the probability of price pushing down to that point is great. So that's something else too, and you'll start understanding probability in trading, right? So like I said, we pretty much focus on, well, I didn't say this, but I always teach everybody in my crew, we focus on reaction as opposed to a bias, right? Or a prediction. Reaction versus prediction, all right? So prediction that is gonna go down to 61,000, but what is my reaction? So price, different confluences of things happening to where I can say, okay, you know what, price is continuing to go down, boom, and this is my interest right here where I want to get in at, and this is the point that I want to take it to. So pretty much, go into your market, go into whatever pair you're trading. Right now, this is EJ, and just go back test it. Go say, hey, look, you know what? Damn, when it was at 160,000, did it get to 159? And then you go back and you test it and you say, okay, boom, I got 159. Was price here before? Yeah, boom, it was here. It came from 159 and pushed up to 160, right? And so you don't have, and this is the thing, that's why I tell everybody, you don't have to be greedy, but you cannot just use this as a confluence alone, right? You just can't use one confluence and feel like, oh, you know what, I'm about to make it. I'm about to be a full-time day trader, right? Because you'll see. Go ahead and try it. You'll see. Okay. Same thing here. 158 to 159, 159 to 160, 160 to 161, 161 to 162, 162 to 163, 163 to 164. All right. And if you go all the way through, you'll probably see this happening multiple times. Okay. But like I said, I want to keep the videos short and sweet. Hopefully you guys will start using these, implementing these, and start making some money, man. This right here is just like a line right up with the pivotal point. Boom, 167, went to 168, came back down to 157, went back to 158. You know what I mean? So you can go all the way down, all the way through the charts, anywhere you want to go, and you're going to see the same reactions all the way through. Now, like I said, there's other confluences that you can use to make this actual strong strategy. Like I tell everybody, every strategy work. You just you got to try to figure out a way that you can be consistent with the strategy. Meaning, time frames, all that good old stuff, right? What session you trading, what pair you trading with that session, all that's going to factor in on how you become better. So if you guys are interested, right? SMSFX Mentor, SMSFX Mentor.com, right? So SMSFXmentor.com. You can go over there and you can go check out some of the free stuff that's on there. Check out some of the important information that's on there. But if you're looking for a mentor that will help you with setting up what session you need to trade, first of all, what time frames you need to trade, so we can work around whatever you got, your schedule, your job, whatever it is. We're gonna try to work around that first. Once we figure that out, then we'll know what pairs to trade, what session to trade, what pairs, what different pairs you can look at during that time. We can go over proper risk management. So we needing to know, meaning like what size account you have, what lot size you should be using when trading that account. We can do realistically and we can do unrealistically, right? So when you're looking at returns and stuff like that, you'll have a general idea on what you're looking to lose, as far as what you're looking to win. You'll know how many trades you'll be able to take, right? We're using that risk management. So if you're risking, maybe you got $100 account, you only want to risk $10, right? That 10% of that account, you only want to risk 10% each trade. That means that gives you 10 trades to trade, right? And that's just saying if you win all 10 of them, right? Out of trading, you got to understand it comes with wins and losses. So you have to understand, hey, look, maybe out of those 10 trades, you don't want to lose no more than 3. After you lose more than 3, then guess what? You're trying to wait until you can add another $100 so that you would be able to get a total of 17 more trades, as opposed to worrying about how much you can make and how much you can double your account. Because a lot of people say, hey, I got $100 account, I want to take it to 200. What person you know making 100% gain and profits every single day, right? That's something that cannot be consistent. You want to find something smooth and consistent. That's the way you're going to be able to make money. Or you'll always continue to lose money because you're not being realistic with your goal, right? So something like $100 account, you'll be lucky to make $10 by the end of the week, right? And that means you did perfect. You got your account up to 10%. If you look at most prop firms, right, they only want you to get the account up to 10% to prove that you're a steady, profitable, consistent trader. So if you're looking at $100 and turning to $100 by the end of the week, that's almost 100% gain out of 5 trading days, which you got to be sure that the market even allows that much, right? So just imagine if you're going from, and this is detail, I'm going into step by step with you guys real fast because I want you to just imagine you were going and getting in and your point of interest was 155,000. So let's just say you did get in right here. Let's just say you had a risk of $10, right? And you had 100 pips stop loss. So let's just take down to 140,900. This would be a stop loss right here. Let me show you a better. So this would be, let me see. This is how the chart would look. This would be a stop loss at 900. You're only risking $10. So we're gonna try to get it at 900. 902 is cool. That's where your stop loss would have been, right? And let's just say 55,000 was your point of entry. So that's where you would enter it. Now, me personally, I would only go for 1 to 3. So that means I would take price to this 300 right here. So I would take price from 5,500 to 55,300. Okay. So that's a 1 to 3, right? I'm risking 10 pips, which is 5,500 to 54,900, right? 55,000, I mean, to 54,900, right? That's my stop loss. That's me risking $10 only, right? And then this is my take profit. So out of that, just imagine, right? So out of that $10 that I'm risking, I'm only trying to get a 1 to 3. So I'm only trying to triple the money. So from that $10, I'm just trying to make $30, right? So $30 plus my 10 equals $40. So it's $40 plus every trade, right? So now look at what price did. It got to the 50, it got to the 55,000, but what did it do? It shot all the way down here. Look how many pips that is. That's so it shot down to 54,400. Do you know how many points you would have to risk in the market to get to that 40 for you to actually win this trade, right? And so a lot of us, we get stuck in these, okay, this unrealistic mind frame, right? Of I'm gonna risk a little bit, but I'm gonna make $1 trillion, right? No, even though price did shoot up to 5,600 or 56,000, you don't know how for certain that was at the time. So no matter what you're doing, so let's just say, all right, right here, this is the 1 hour time frame. Let's just say we shot down to the 5 minute, all right. Let's just say we was about to enter in off the 5 minute, all right. So we can keep it simple. All right, so let's go over here. Let's find our position first. I know it's on here. Just mark it up. Hold on, y'all. Let me go back to the one. No, I ain't mean to do all that. Okay, let's go back here. Oh, maybe it disappeared on me. Or no, I was way, okay, I know why I did. gonna move this down a little bit right here. Boom, and we have 55,000. So when we scale back down to the 5-minute, we just gotta find that 55,000, which is here. And then we just gotta push on over until we see. All right, we here now. Okay, we here now. Boom. So, all right, so now imagine. So it even looked bad on the 5-minute, bro. You would have never caught this. So this is a bad example. But let's just say it was some candlesticks right here. Boom, boom, boom. Price shot down here. Boom. Right? It already hit your stop loss, blew you out. Boom. You feel me? Now, the next person that put it down, that put their stop loss at a 400. Now, let's just see what would a 1 and 3 look like, or let's see what that stop loss would be. All right. So now let's put it down here. Let's just say you put your stop loss at 400 flat. Boom. So you would have just made it 400 flat. But let me tell you how many pips that is, right? So now you got your stop loss at 5,400 from 55 flat, okay? So that's almost 600 points in the market, right? So now a 1 and 6 would be 6, 8, 12. So let me see. 6, 8, 12. So 12 points in the market is what you would want, 1 and 3 out of that. So you would want to go up. All right, so that's 300. 600 is 600. 9. All right. 200. Okay, so how much is that? 369. All right, so we still gotta go up 3 more. 3 more is 500. 3 more is 500. Okay, and then we gotta go 3 more. So, and that's 800. So this is where your take profit will have to be at, right? Plus, now if you're doing $10 per pip, $10 per pip, right? So you already risking. How much I say that is? 600 points. So you already risking $60 now. So you get $60 right now. And then this would be a 1 to 3 right here. So you would make 60, 120, 180. Wait, 160, 120, right? 180. I'm doing my math in my head, 240. 270. And then 3 more. $300, right? So you would make $300 off risking $60. And then, like I said, you just have to make sure that that's realistic, right? You're only risking $60, right, to try to make $400, right? And sometimes that's not realistic. Even though if you would have did that on this trade, you definitely would have came out and ate good. But that's far, far, far advanced. That's far fetched. A lot of people don't have patience like that, and a lot of you probably didn't have time. So imagine if you only had 4 or 5 hours out the day, and you're on the hourly time frame, and this occurred. This trade actually occurred. Let's look at how many candles that took. Let's look how many hours that took for price to even get to that point. And are you that person that can hold price for that long? So 1 hour, 2 hours, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. See, it still ain't touched yet. 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48. We already 2 days in, right? You're not ready for that yet. 2 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, right? So almost 3 days, right? 2 days and a little over a half, right? You know what I mean? That you would have had to hold that trade until price literally touched that point. By that time, you could have got into 15,000 trades, dude. You could have did 100 different things. You stayed in the consolidation to make $300 for 3 days. You know what I'm saying? So I know it was a $6 risk, but at the end of the day, you had to wait 3 days to stay in the trade, which you wouldn't have. You wouldn't have that psychology yet, right? So you want to make sure that you do everything realistic when you first starting out, so that way you can be consistent with everything that you're doing. And so smsfxmentors.com. I hope this video will be helpful. I hope you guys can start making some money off of using key levels. Like I said, a lot of that other stuff, you can go into full detail with me. We do sit down, we do one-on-ones. You'll be able to have full access to me. We'll be able to go over different pairs together. All right. And you'll be able to do Zoom call meetings straight direct. But now I don't want to keep the video too long, man. smsfxmentor.com. Go check it out, man. There's a lot of cool stuff in there. Let's get it, gang.